So in my line of work, I've noticed that a lot of people do not understand what their insurance policy covers. Today, I'm specifically talking about auto, and I'm here to give you some tips as the consumer and also as the adjuster on what your policy covers and what the language actually means.
You in the past, I'm in the future.
Thank you so much for clicking on this video. If you're new here, my name is Keela Trishan, and I make videos on lifestyle, womanhood, mental health. I do a lot of vlogs as well. I talk about day in the life working in the insurance industry, day in the life working with a toddler from home, weekend vlogs, really anything you can think of. So if that's something that interests you, definitely go on ahead and click that subscribe button below. Be sure to turn on your notifications so you don't miss any future uploads. And if you are returning, thank you so much for coming back and thank you for your support. Okay, so as I prefaced, I wanted to talk about some things that are in your policy or may not be in your policy that you need to understand. I have noticed that a lot of people, like, you get your policy because it's required and you just simply don't know what some of these terms mean, and you think certain things are included in your policy that aren't. And what happens is people don't understand what's covered and what's not until they actually have a claim. At that point, it's too late. As an adjuster myself, my job is to interpret the coverages that you already have on your policy. So I think it's important for the consumer to know what they have and kind of be able to look at your policy and see where maybe you're lacking. And also, it's important for the adjuster to be able to explain these things to the customer because rebuttals come up all the time. So if this is something that you think would help you out, definitely go on ahead and stay tuned. Okay, so quick disclaimer. I practice insurance in the state of California. So the information that I'm talking about is going to be specific to California policies. So if there's anything that you need clarification on in your state, I would suggest either looking at your specific policy for your auto insurance, or you can also call your insurance company, speak with an agent, and then they can clarify any information for you. But the first thing, and excuse me if you see me looking down, I'm just looking at my little notes. But the first thing I wanted to talk about is rental. Rental is a hot topic, especially in California, because we are a driving state. Now, obviously these days we do have a lot of options. There are a lot of ride sharing apps like Uber and Lyft. So you don't always have to rely on having your own vehicle, but rental is still something that is included if you choose to purchase that as an extra, like, premium to your policy. The issue that I've been running into, not really often, but it comes up often enough to where I thought I should mention it here, is that people think that if they have full coverage insurance, full coverage is basically comprehensive coverage and collision coverage on your car. But people think that when they have that type of coverage, it automatically comes with rental. And that is completely false. So the idea is that if something happens to your vehicle, if you only have comprehensive and collision coverage, if something happens to your vehicle, your policy will take care of your car up to it becoming a total loss. So whatever the market value is at that time. But if your car is out of commission and you don't have another means of transportation, you will be responsible for paying for rental or Uber or Lyft out of pocket. So I've gotten into situations where customers think that we are trying to, get over on them by not paying for a rental vehicle, and that's not the case. The way the insurance company looks at it is, if you would like this additional coverage, you have to pay premium for it. So the way I typically explain it, if someone does not have rental on their policy, I'll just let them know, hey, unfortunately, you're not paying premium for this additional rental coverage. If that's something that you want to add to your policy in the future, I would suggest you talk to your agent. They can kind of give you the prices and what that change in your premium will be. Typically, it's not that much more per month. Sometimes people don't get it because they think it might be expensive, but a lot of times it's like a few dollars extra per month if you want to get a certain type of coverage. Every insurance company is going to be different. They're going to have different tiers. So obviously, the lower amount that you have per day would typically go to like a smaller car. The more you pay would go towards like a bigger car, something like that. So yeah, if you would like to have a rental on your policy, if that's something that's important to you, you want to specifically make sure that you have your agent, or if you're doing it online, you want to make sure that you select rental coverage and select the type of coverage that you want, so you can have that if in the event something happens. So just to kind of clarify, rental is not automatically included on your policy. Rental is something that you have to specifically say that you want in order to get that coverage if in the event you do have a total loss or you get into an accident and your vehicle's out of commission. Okay, so another thing that I wanted to say about rental coverage specifically before I move on to the next topic is that you are going to be held to the amount of premium that you purchase. So for example, somebody with $35 a day in rental coverage, you're paying premium for that. So if something happens to your car and you need a vehicle, the insurance company will pay up to $35 per day for a max of 30 days for a rental vehicle. If you have a Mercedes, a $35 a day premium is not going to get you a Mercedes. So sometimes people think that because they got into an accident that the insurance company is going to pay for a like car, and that's not the case. Unless you're going through the other insurance company, which I'll do another video on that to kind of talk about the differences, but you will only get payment from the insurance company for the premium that you're paying. So if you requested $35 per day, you can get into a vehicle up to $35 per day. That's including taxes. They don't pay for gas or anything like that, or any additional insurance. It's only for the vehicle. So that's something that's important to understand, because sometimes people will buy extra gas, or they'll get a vehicle that's a little more than the $35 or whatever the case may be. And then they're pissed when they find out that the insurance company is only covering this $35 and you're responsible for the difference. So it's important to understand too, when you're selecting these coverages, think about the type of car that you want to be in. You can go with the cheapest car if you're okay with being in like a small compact vehicle, 4 doors typically, maybe seats 4. If you have a bigger family and that's going to be an issue for you, then you may want to think about that ahead of time and make sure that you are paying for enough rental so that you can get a car that accommodates your needs. Or if that's not something that's important to you, then just be prepared to pay whatever that difference is out of pocket. So the insurance company will pay the $35, but if your vehicle is $50 a day, then you'll be responsible for that additional $15 plus tax if you need a bigger car. So I just want to clarify that, because some people think that, oh, I have the coverage, they're going to pay this. And it's like, no, they're only going to pay for what you chose on your policy. Okay, so the next topic that I want to talk about is total loss. A lot of times people think that when the insurance company deems your vehicle a total loss, that means that your vehicle is not drivable. So I see this a lot when people have like a newer vehicle or a vehicle that they feel is in really good condition, and they're able to drive off from the scene. And when the estimate is written and the car is determined to be a total loss, they're floored. Like, wait a minute, why is my car a total loss? Like, I can still drive it. It's not a total. What's going on? So by definition, a total loss basically means that the estimate written for the vehicle is either very close to, meaning like 80% or more than what the vehicle's current market value is. So the vehicle being a total loss is basically the insurance company saying that they cannot guarantee the integrity of the vehicle by fixing it. So instead of allowing for repairs, what they'll do is they will offer you cash for your car. So they'll offer you the market value plus taxes and any unused registration from the state of California for your car. So the idea is that you'd be able to go and like purchase the same type of vehicle. So if you have a 2003 Toyota Camry, you're gonna get the market value plus taxes and unused registration for a 2003 Toyota Camry. Nothing more, nothing less. So I think sometimes it's twofold. So people get kind of thrown off by the idea of a total loss because they feel like, oh my God, I can't afford another car. What am I gonna do? Or maybe they plan on keeping this vehicle for a long time, and just the idea of it being a total loss is, it stresses them out. So I get it. There's two things with this. So because a vehicle is deemed a total loss, all that means is that the insurance company is not going to fix it. It doesn't mean that you can't fix it. So if the estimate is pretty close, or it's something like there's sentimental value for the car or whatever, you can still fix the vehicle. You're still gonna get a settlement, and you can use that settlement towards fixing the car. Now, there might be some out of pocket that you have to pay, because with it being a total loss, like once they get under the hood or once they start taking the vehicle apart, they might find additional damage. You do have to understand that that is a possibility. So you can fix the car, you can get it back running good on your own. The insurance company's just not going to help you. And then in the state of California, you're now going to have what's called a salvage title. All this means is that your current title is going to be branded and it's going to say salvage. What this does is it protects future buyers should you choose to sell the car. It lets them know that this vehicle was in an accident that deemed it a total loss. Now, this does also affect the market value. So if you go to sell it, the vehicle is not going to be worth as much as it would have been if the car was not in an accident that deemed it a total loss. But then at that point, you just have to kind of decide what works for you. So I have some people that say, like, I don't even want to deal with fixing the vehicle on my own. Like, I'd rather have the insurance company fix my car. If they're not going to fix it, that's fine. Give me the money and I'll go get another vehicle. Or you have people that say, like, I've had a situation where a gentleman, his vehicle became a total loss, and it was the last thing that his mother gave to him before she passed. So for him, it was a sentimental thing. He didn't want to get rid of the car, so he was okay taking the lower settlement to keep the vehicle, and he used that money to get the car fixed. So it's a lot of ways you can handle it, and it's not an end-all be-all. It really just kind of depends on what your plans were for the vehicle. Some people want like a second opinion, and you can absolutely do that, but the insurance company usually isn't going to pay for that second opinion. So if you take the vehicle to a shop that is charging storage after it's been deemed a total loss, the insurance company isn't going to pay for that. So these are just things that you want to keep in mind. Sometimes people have like their family mechanics and stuff like that, you know, look at the car and they're like, oh, I can fix this. Completely up to you. It's just, as an insurance company, a business decision was made saying that they're not going to be able to fix this car. So don't think that just because it's a total loss, you can't keep it. The only time that you wouldn't necessarily be able to keep the car is if you're making payments on the vehicle. It's a whole other topic. I kind of did a video. I don't remember if I talked about that, honestly. If you have questions about that specifically, ask me in the comments and I could do a video on that. Come to think of it, I don't know if I'd be able to do a full video on particularly that part. It's pretty cut and dry. I just don't want to make this video extremely long. So if you have questions, again, regarding total loss and, you know, you're still making payments on the car, ask me in the comments and I will answer that separately. Okay, so speaking of total loss, the next thing that I wanted to discuss, and I think this is very important because some people don't understand the severity of this, but if you have a lien holder and your vehicle becomes a total loss, the insurance company owes your lien holder first because they are the title owner. They are the owner of the vehicle. Even though you're making payments, they own the car until you pay it off. So you're still in the process of making payments. The vehicle is now a total loss. Now what? So the insurance company is going to reach out to your lien holder to find out how much you owe on the car. So let's say the vehicle was deemed to be worth $10,000 market value, and you owe $8,000 to your lien holder. So what the insurance company will do is pay the lien holder $8,000, and then you will receive the $2,000. Now, sometimes people think that once we get to that part, they can just stop making payments, or once their vehicle becomes a total loss, they can stop making payments. And that's not how it works. So the lien holder is going to expect you to make your payments until the check is sent off, basically until they receive payment. So it is not smart to stop making your payments because that can negatively affect your credit, and the insurance company can't do anything to help you with that. Now, what I typically tell people, and it could be different for every company depending on how they do it. I've worked for a company where they had us do all of it, where we call the lien holder, get the payoff, send the check and all that stuff. And then I've worked for a company where they have us send that task of calling the lien holder and getting the payoff to another department, and once it's complete, it comes back to me to make the payment. So the time frame can be different. So sometimes if it's just a retail account, then it may get done within like a week. I would say like 7 to 10 days is kind of the amount of time it could take for us to call, get the payoff, and then get the payment to the lien holder. With a lease, it's different because sometimes they won't give us the payoff over the phone. Sometimes they want us to send in all the documents, like the market value of the car, the estimate and all that stuff. They want us to send that to them, and then they'll calculate what your lease payoff will be. So that process can take anywhere from 14 days, and I've seen it take a month with a certain lien holder, and I'm not going to say their name. But yeah, so with that being said, you want to still make sure that your credit is in good standing. Now, if making the payment is going to be a hardship for you, like let's say you're in the process of getting another vehicle and you just simply can't afford to make 2 payments, but you know that your insurance company is going to be eventually taking care of your payment for the car, what I would suggest is reaching out to your lien holder directly and letting them know the situation. So sometimes they can give you a grace period, or they can let you know, hey, we need this from the insurance company, or we need a photo of the check being sent to us, and then, you know, we'll let you off the hook, whatever the case may be. So I don't want to speak for the lien holder because everybody's different, but just make sure that you are talking to them because you are their customer. We are a third party. So we're going to reach out and we're going to get the information and it will get paid. But the process is not going to speed up because you have a payment due or because you don't want to continue to make payments. You still sign a contract with that lien holder, so you need to make sure that you're honoring that so it doesn't affect your credit. Now, if you don't care about it affecting your credit, completely up to you. But just fair warning, people sometimes will just stop paying and then they'll reach out. Oh my God, this hasn't been paid. This hasn't been taken care of. We're still in the process. You still need to make sure that you're good over there until we get done with our portion. So just so you know, make sure that you're staying in touch and keeping tabs on your payments. Okay, so the next topic that I wanted to talk about, and I feel like I did talk about this in a previous video. I'm not sure which one because I've done a couple insurance videos like maybe close to a year ago at this point, but I want to talk about it again because it is important. So it's mitigating your damages. This is a term that you will hear a lot if you're going through your insurance company for, any type of claim, or even if you're going through a third-party insurance company, like if someone caused an accident, you're going through their insurance, you're going to hear this term. So mitigating your damages basically means, in layman's terms, that you need to watch the charges. Don't assume that the insurance company is going to pick up the charges if you leave your vehicle at a shop that's accruing storage, or if you just continue to rent a vehicle just indefinitely. You need to let your insurance company know what's going on at all times so they can let you know what is reasonable and what they're going to pay for. The last thing you want to do is be in a situation where you've let your car sit in a tow yard or at a shop, or you went and got a rental car that wasn't approved, or whatever the case may be. You don't want to do that and then the insurance company tells you, oh, sorry, like that bill is yours. I've seen that happen multiple times where people think that because they have a claim that the insurance company is just simply going to pay for it, and that's not the case. Like, the insurance company is going to pay for what they consider reasonable. So the biggest example I can give you, and I keep mentioning it, is storage, and that's because that's kind of the main thing, especially with like auto claims. So just to kind of let you know how it works, the insurance company cannot tell you what body shop to go to, right? And they're going to let this be known. So there are shops that the insurance company works with. Those are considered, every insurance company has a different term for it, but it's basically like the network shops that they work with. So typically with these shops, if your vehicle is there, they usually will give a certain amount of time before they start charging storage. Typically it's like a month. So they don't want your car sitting there indefinitely, but if it's been there for a month while the insurance company is investigating and inspecting, they will not charge storage. So it's no cost for the customer or the insurance company to move the vehicle once everything is taken care of. Now, if you use your own, what we call preferred shop, so you have a shop that you go to for all of your repairs or all of your, mechanical issues, whatever, that shop may charge storage because they don't work with the insurance company. Now, the insurance company is going to be responsible for a certain amount of storage, but what I can tell you is if a vehicle is just simply sitting at a storage facility or even a tow yard, like no movement, you didn't let the insurance company know it's sitting there so they can get started on it, or you found out that your vehicle was a total loss and you made no effort to move it, either meaning that you allow the insurance company to move it or you gave the okay for us to move it. If you don't do anything to assist with that, then you might be responsible for some of those damages. So it's up to your adjuster really to let you know what that last day will be, but it's up to you to let your adjuster know that the vehicle is here or, whatever. So it's a lot of just basically making sure that you are keeping your adjuster informed if something changes, or if, your vehicle is sitting somewhere, and it's also the adjuster's job to make sure that they are aware of where the car is. So when we're asking you that question, like where your car is at and, just like storage information, stuff like that, that's what we're trying to get at, because we're trying to make sure that the blow isn't as high. So a lot of times people think that this is the insurance company being cheap. And I can see why you think that as a consumer, but understand too that your premium could go up the more the insurance company has to pay on your behalf. So if there's a lot of unnecessary charges because you didn't tell us something, then sometimes that cost is gonna be passed along to you when it's time to renew your policy. And then also it affects all of the other insured. Sometimes like if the insurance company has to keep on putting out money for unnecessary fees, then they have to raise people's premiums. So that's why it is important for you guys to let us know what's going on. But again, it's important for the adjuster as well to kind of stay on top of certain things, because the lower that we can keep those charges, the better it works out for everyone. Okay, so the next thing that I want to talk about, and I'm just going to give y'all a full disclaimer. whenever I do a video talking about insurance policies, I am going to bring this up because I need you guys to understand. Like, I really genuinely need you to understand. When you are going through your insurance, your deductible always applies. It always applies. There is this misconception that when the accident was not your fault, that you do not have to pay your deductible. So it's partially true. And then I'll kind of explain this to you. I've had several people go up on me, when I call them to present their value, or when I call them to talk about, repairs to their vehicle being a total loss, whatever. And either the investigation is still ongoing, so it hasn't been determined that the accident isn't their fault, or it has been determined that it's their fault, but they're still going through like the motion with the other insurance company. People think that once we know that it's not your fault, that you don't have to pay the deductible, and that is not true. Your policy states that your deductible is, let's just say $500, right? And the deductible you choose. I know that there's policies where like you can choose a zero deductible, I believe. I haven't really seen that, but typically like the lower your deductible is, the higher your premium is. And usually it's not like too crazy of a difference, but yeah, I haven't really seen zero deductible. I've seen like deductible waivers, but back to the subject at hand. Let's say your deductible is $500. Your policy states that if something happens to your car, you are responsible for the first $500, and your insurance company will pay for the rest up to the market value of your vehicle, okay? So if someone hits you and your insurance company steps in to take care of it, they determine that the other person's at fault, they're still gonna take the deductible up front from your settlement, okay? Now, the way that it's possible for you to get it back are two ways. So some insurance companies have what's called a deductible waiver, and usually that is afforded to you if like it's been so many years since you've had an accident or something like that. They might give you a certain amount off your deductible. So usually it's $500. So if your deductible is $500, then you would have a zero deductible for that claim. If your deductible is $1,000, then it would only be $500, $1,500, $1,000, and so on and so forth, whatever. The other way is for the insurance company to go through a process called subrogation. What that means is that we know that we know that the other party is at fault for this accident. So we're gonna pay for the damages up front because you are our insured, but we're gonna go after the other insurance company that's responsible for what we paid out. When we go after them for what we paid out, we're also gonna try to get that deductible back too. So if that deductible is recovered, then it is gonna be refunded back to you. So you will get that back. However long it takes, the investigation can take a few months just to kind of let you know. But usually what'll happen is once they receive payment from the other insurance company, then a check will go out to you. Like you'll be notified like, hey, we recovered this amount. Here's your $500 deductible, or here's your $1,000 deductible, whatever. If you get hit by somebody that does not have insurance, or they gave you insurance and their insurance wasn't active, or, hit and run, whatever, there's nobody to go after for that deductible. So you are going to be responsible. So going into a claim, it's just important to understand that this is the agreement that you signed up for. So at the very minimum, you will be responsible for whatever deductible you chose. Best case scenario, we're able to get it back for you and we're able to refund you. Even better scenario, you have deductible waiver, so you don't even have to worry about it. But worst case scenario, that's what you signed up for. So arguing with your adjuster is not going to change that, unfortunately. I've had that situation a lot, and I can tell you personally, speaking as an adjuster, I don't take any pleasure, arguing with you about that. And truth be told, if I could just give you your deductible to get you off of my phone, I would give it to you. But I have to adhere to the policy and to, the regulations that like of my job, you know what I'm saying? Like I have to adhere to that. So like we understand that you're frustrated and we understand that you don't like that answer, and we understand that it's not your fault, but the policy is the policy and we have to enforce it as such. I know this video is getting long. I'm almost done, y'all. I'm almost done. Bear with me. So the last thing I want to talk about is enhancement. So people think that when they get into an accident, that you know, if they got rims on the vehicle, or they got, I don't know, whatever they did to enhance the car. Like they got some type of crazy seat covers, or, you know, some type of crazy paint job. They think that is automatically insured, and it's not. Your policy typically for the vehicle will cover like the stock items on the vehicle. So when it comes to rims specifically, that's a big thing. Like people, especially like total loss, people want to get paid out for their rims. Now, in some cases, we are able to pay out for the rims, but it's not going to be a dollar for dollar thing. And that can become an issue, especially if you just got the rims. Like if you paid $3,000 for it or something, and the insurance company is only willing to give you an additional $300 or something. And that's just kind of an example. Obviously, you're losing money, right? So typically what'll happen is we'll ask you, do you have an endorsement on them? And what that means is when you get these rims, best practice, should I say, would be for you to let the insurance company know that you got this. Now, the downside is that your premium could probably increase because the insurance company is writing your policy based on what you have and what the potential amount of damages could happen if there's an accident, right? So your premium could go up, but the upside is that if something did happen, you would be covered. There is also an option, and I don't know if every insurance company offers this, but I know that the insurance companies I've worked for offer this. But you do have the option, like if your car is a total loss and you're not keeping the vehicle, you have the option to go and get those items. So like if you put rims on there, you can go and take the rims off. The insurance company isn't going to help you take them off. So you need to bring your own tools to take them off, but you would need to replace what you took off with the stock items. So, you know, if you have like stock hubcaps or wheel covers or whatever, you want to put those back on or get some, because you can't just leave the car bald, because that could actually hurt the value of the vehicle. Like they'll take money away if you don't replace it. So just kind of keep that in mind. Like if you're doing something that's going to be like really expensive on your vehicle, you might want to call your insurance company to find out what the premium change for that would be, because the last thing you want to do is lose money. And then honestly, most people aren't equipped to go and just take off the rims or take off, you know, whatever they added to the car. You could always take a mechanic out there with you to go do it. And again, you're responsible for any, you know, issues. Like you have to do it on your own. But if that's something that you are wanting to be covered in the event of an accident, you want to make sure that you're getting all the information that you need, so then you know if you need to pay more premium, or if you might not want to even do that enhancement if it's going to be too much. So definitely something to consider, but don't assume that things are going to be covered just because it's added to the car. Your policy is typically configured with the items that the vehicle comes with from the dealer. All right, you guys, so I know that was a very lengthy video, and I apologize, but it's honestly, I didn't even scratch the surface. Let's just say that. There is so much information with insurance policies, and really my advice to not only adjusters, but to consumers is to make sure that you are just kind of periodically going through like the policy language. If there are things that you don't understand or things that you want to clarify, it really does help to kind of go through the policy, to kind of read the verbiage and just, you know, try to familiarize yourself. For my adjusters out there, whether you're beginning in the industry or like you're seasoned, these are things that you want to understand, because these topics do come up a lot, especially when, you know, we're trying to explain to someone why we can't cover something. So it's good to know what you're talking about, because obviously, like, if you know what you're talking about, they're going to trust you. And I just want to be a resource, because like our job is to be able to interpret the coverages that they have, so we can let them know what we can pay for and what we cannot pay for. And if we can't pay for something, we need to be able to let them know why we can't pay for it, show them, you know, where they can find this information in their policy, and then also in some cases let them know, hey, you know, if you're not happy with this outcome, you know, and it's because of a coverage that you didn't have, maybe you want to consider adding this, so God forbid anything happens in the future, you do have this coverage. And then as a consumer or as a customer insured, I think it's important to understand your policy, at least on a surface level. So if you do have a claim or something, you know what you're entitled to and what you're not entitled to. The last thing you want to do is get your blood pressure up and, you know, kind of just be arguing with your insurance company for something that you just simply don't have. I can guarantee you, coming from an adjuster standpoint, if we can pay for something, we definitely want to pay for it. We're too busy to argue with you, okay? So if we can pay for it and it's something within reason, we're heavily regulated by the Department of Insurance. So the last thing we want to do is get a complaint on something that we could have prevented. But you do have to kind of be familiar with what you're signing and understand if you need to make some adjustments. So if there is a situation, you are covered. So if you enjoyed this video and, want to see more like it, definitely give me a thumbs up. It really helps with the YouTube algorithm, and it also lets me know that you're enjoying this and to keep them coming. If you know somebody that could benefit from this information, definitely share it, let them know. I want to get this information out there because I do think that there is a lot of misinformation, people talking to people, not really knowing and understanding what their policy covers. So I want to kind of clarify it as somebody who works in the insurance industry. Yeah. If you made it this far and you haven't subscribed, definitely go on ahead and click that subscribe button below. Turn on your notifications so you don't miss any uploads. Thank you so much for watching, and you guys have an amazing day. I'll see you next time.
You in the past, I'm in the future. You mad that they don't salute you. I need a bag, size is super. They turned your bag, it's like I never knew you. Leave that.